All right, everyone, it's time for the end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, we need to jump right into it because this is going to be a very quick video. I just want to show you something that, you can't make this stuff up. Markets do continue to move in repeatable, predictable patterns. Here's a Bitcoin futures chart. You will recall we've been going over this chart for quite some time. We have a crash alert sell signal for tonight into tomorrow's trading with that trend line support south of 55,000. Next target, top of the Kumo cloud at 40,000. Old resistance zone, 55,000 to 50,000. All right. And the one below that was the 30 to 35,000. You can't make this stuff up. I told you this, months and months ago where these areas were. And now you look and you see how they're drawn on the algo chart. This was predictive way back here. Okay, way back here. I told you where those places would be, and that's exactly where they are today. All right. You don't have to like it, but you do have to address it. Okay, that is your Bitcoin. As far as your Ethereum, no such alert. It's just straight up. All right, hitting new highs every day. Bulls are getting that upside production. Ethereum is wide open. As far as Litecoin is concerned, it's right at the resistance area. That 210 zone is a very powerful resistance. If it can push through it, then you can get more upside production from the rally alert back here. So this one is trying to do a little something, stage a comeback. As far as Theta is concerned, unfortunately, we have a crash alert sell signal for tonight into tomorrow's trading with a trend line around the 650 zone being the immediate target there. Next up is XRP Ripple. You'll notice that the XRP Ripple has gotten itself out of the corrective position and is now staged itself for rally mode from the rally alert buy signal from October the 28th. And right now it looks like it wants to push up toward, closest toward the 150 mark, all things being equal. All right, so gotta trade what the market gives you. Now flipping back to Bitcoin, looking at the equity side, here it is. Okay, so we have a crash alert sell signal on GBTC for tomorrow. Trend line support around the $42-ish mark is now in play. So that's something that's going to have to be watched. I told you the initial rally alert buy signal for September the 30th is where the market needs to come down and close gap. All right. It has not done so ever. That's a long way to go. That means we need to get south of $33.29 on GBTC. You're not going to have GBTC pull all the way back, and Bitcoin futures don't pull back, and the cash market doesn't pull back. They're going to do it in unison. This is what we cannot get from around. You got to watch and see if we get any downside production. As far as real estate is concerned, with the FOMC making their decision on rates, market still holding with the bears in control, and you're in a corrective position. Trend line support south of 107.5 is in play, and that's the downside target. Can the bulls reactivate at any point? Yes, but there's something wrong in this particular chart, and that is the first thing you notice is the gap from October the 14th, which means price action has to drop below 106.15 in order to fill that gap. You're standing here today at 110.69. This is the first problem. The second problem, which is a bigger problem than this gap, is this bearish pointer that was performed on October the 6th. Now, it's a bearish pointer within a buy mode from a rally alert buy signal from October the 1st. But it's still a bearish pointer nevertheless that never got tested. All right. So once you close this gap, you're in danger of coming down here. That could potentially take the IYR, the real estate ETF, south of 101.56, and you're at 110 now. All right, so there's a potential $9 collapse in price coming, potentially in IYR. As far as oil, staying on the equity side, ticker OIH, it's in a corrective position, already here around the trend line support. If it gets any, I mean, it could lock in and get more downside momentum at any moment because the bears are in control. We had the rally alert. I'm sorry, we had the crash alert sell signal coming into today. We got that initial downside production. I think more is on the way. You know, just the beginning of a red zone as well, which means that we have the potential for more selling pressure to come in, and this would crash price south of 200. So definitely watch your back. As a result of FOMC day, the US dollar basically just held still, but the bears are still in control, even though the corrective zone, they're out of the corrective position. The market failed to rally on this news today. So you need to watch, because there's a potential for the dollar to lock back in and the bulls to take control of this market, and that'll make the dollar a lot stronger. I know it doesn't make sense. I know. Looking at the euro yen, bears are holding this one in check too. It's in a corrective position. Trend line support at 131, actually south of 131 is the initial target if we get any momentum on that one. Next up is the Canadian. We already saw what oil was looking like in OIH. Canadian is just, it's flat on the momentum. Right now, you should be getting a lot more upside production. You're getting the upside production, but it's weak. Overhead trend line resistance, though, is the initial target. It is definitely the initial target, but we have not seen any real momentum underway. And I think that we should at some point. You would expect that. You would expect it, right? You would want to see that, but we're just not getting it yet. Overhead trend line resistance, though, is the target around the 125-ish level, somewhere around there. At least between 124 and 125, I think, is where this will go. But then it may be in trouble because you're still in the red zone. All right, this is just a little technical bounce from the lows, but until I see some real momentum here, this is a little problematic. It's a little problematic. Just saying that. All right, looking at. Let's see here. Let's look at. Oh, this is another one. This is a good one. Let's take a look at what gold did today, because during the FOMC presentation today, gold really got smacked down. You saw, you're already in a corrective position, and the bears are already in control of the market, and you just got major downside production today from the crash alert sell signal from October the 26th. It just put that new leg down, put a new leg in, and it's still in the green zone, but as the lower you go, the closer you get to coming out of this green zone and going full blown and back into the red zone like you did back here. And you saw what happened. The last red zone experience was a tremendous collapse in price, a tremendous one. And that's what's coming up here. This new leg down will accelerate, take out this prior low, and you could see potentially the market coming back here to August the 9th, the bearish pointer, which would send gold prices potentially below 1677, ladies and gentlemen. All right. That's a lot of money. All right. That is a lot of money. All right. I'm just saying. All right. So can we be looking at shaving hundreds of points off of this gold? Is gold about to fall hundreds of dollars? It could potentially, at least $100, right? Just saying, get ready for it. How does this fare with the GDXJ, the gold miners? Gold miners fared better today. The gold miners rallied today. They got a boost from the overall stock market. So your gold miners acted more like stocks today instead of being like a commodity. The commodity itself got cheaper, so some kind of way, I guess their earnings are reflecting that they're doing all right despite the massive pullback today. You could make an argument, since now we have a rally alert buy signal for tomorrow, that the market is just closing this gap here and then it's going to fall or fail. I don't know, but this could get as high as 44.50 before it starts running into problems. But right now we got the rally alert buy signal. Let's see if we get that upside production. You got to trade what you see, right? Now what you think. Taking a look at GLD, the ETF counterpart to this is what it's looking like. It fell in concert with the futures, and it made a bearish pointer on the day. And now you're officially in the corrective zone, and you have downside momentum, which is threatening to take you out of the green zone and put you right into the red zone. The question I know you're asking is, well, what did silver do? Well, silver is always the weaker sister, right? Here you go. Mad downside production, threatening to fall outside of the Kumo cloud altogether, threatening to fall out below the Kumo cloud support. Can't ignore that. If you look at its counterpart, and the counterpart here is SLV, so let's go ahead and pull that up. And it's a little bit different. All right, you saw what happened with the silver. You made a bearish pointer on the day, but the SLV is diverging. How is that possible? You got a rally alert buy signal for tomorrow's trading in the SLV. Is it because you got to close this gap, ladies and gentlemen? So the potential here is to get around the $22 mark, which is, we're talking pennies, not dollars. So if anything, it probably will. But can it break outside and just rally and go the opposite direction of its silver futures counterpart? No. You can diverge for a brief period, like a day or two, but not really. You know what I'm saying? This ETF is supposed to track the futures, correctly. Now, the only downside or caveat you can say when you're talking about futures and the ETFs that track them is that you got contract rollover in your futures, you got backwardation in the contracts, or you got contango, situations where the front month futures is higher than the back month, or the back month is higher than the front month. So you got all these issues going on. So sometimes you can get some issues there around contract rollover and adjustments, but you still had this gap down, and it still needs to be closed before the market decides where it's going to go from here. So just had to show you that so you can get the overall idea of what's going on in these markets, in this space. Now, today was about interest rates. Here's what your bonds did, ticker TLT. Look at this bar. You got a parabolic bar to the downside and closed at the low of the session and fell below the trend line support. Yep. Okay. This is not a good sign for bulls. You're in a bullish position, but You're having a lot of problems here. This is not a healthy situation. You should have never saw this and then come all the way back down like that, but it didn't have a choice because they had to close the gap. You know what I'm saying? You made a gap on the way up, you closed it, and then you had to come down here and close this gap here. Then you gap up again. But you kind of filled it intraday. Let's see, 143.21. Yeah, you filled it intraday, so you're okay. You're okay. You kind of filled it intraday. Yeah, let's see, 43.15. But yeah, but not really, not really. This is not really a gap fill. So I think you're coming down. Yeah. So it's a weird thing because if rates are being artificially kept low, the only way you can do that is with the higher bond price. But if bond prices are going to be plummeting here, those rates have no choice but to go up, man. So maybe they're losing control. That's why this thing is looking so messy. Maybe the Fed is running out of ammunition and they're in a dangerous place right now. Trying to switch over to the weekly chart and I'm not getting anything. Okay, there we go. It took a while for that to come up. Okay, so on the weekly so far, this is what we came into this week under the auspices of the rally alert buy signal from the week of October the 15th. The following week, we got no upside production. Last week was where we finally got the upside production. And now we're pulling back and you're in a corrective state. And so far, based on today's performance for going into next week, you're already not looking good. You're starting a crash alert sell signal position going into next week if all things keep up in this situation. All right, so that's it, folks. I just wanted to show it to you, let you know what's going on with today's FOMC. They can't raise rates. They're talking about tapering and their asset purchases and all that stuff, but no one really cares about that. What they care about is these rates, because the rates is what the man on the street is going to be affected by, and inflation worries and all those things. So that being said, you know what it is, man. PulseWaveTrading.com. Smash that like button, and remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.